Let's start with the management of Hindustan Copper. Got on board with us Santosh Sharma, the CMD, joining in, and lots really to talk about with him. It's been a mixed bag that they've seen in the second quarter performance. Would definitely want to get in an outlook on the copper prices amid the trade war fears, and also India's copper supply demand-supply dynamics, that is something that we would like to gather. Mr. Sharma, morning. Good to have you on the show. Compared to the second quarter FY18, the revenue growth has been a little sluggish for you, as I see in your performance. Is it because of the fall in average copper prices?
Actually, I would like to come to this revenue from operations you are concerned with. In fact, revenue from operation depend upon one most important factor. At what stage of value addition you are selling the product. Revenue from operation, as you have observed, actually revenue growth has been sluggish, so to say will not be correct. We should see it in terms of our profit before tax, Q2 versus Q2. That has there is a growth of 24% in the profit before tax, in spite of this LME fall by about 4%. Similarly, there is a similar growth in PAT also, 23-24%. And most importantly, my production has increased by about 18% during this last year quarter 2. Reason for the less revenue from operation is only that the stage at which my product was sold was in a copper concentrate. Earlier, Q2 in last year, it was in form of copper refined copper. If I sell my product in terms of refined copper, that generates more revenue. But profitably, from profitability point of view, I can tell you that profitability has increased by 24% Q2 versus Q2. Reason being the same. I have not sold the product after refinement, this refined stage. It was sold in an intermediate stage, in form of concentrate. So that has fetched me more revenue in spite of a bit sluggish revenue from operations and also the lower LME. So that way performance has been tremendously good.
Okay.
Hello.
Yes. Mr. Ramamurthy, give us a sense. Copper prices internationally have slipped close to $1,000 per ton from recent highs. Do you think that there is a bit of a fear factor at play here because of the ensuing trade war between China and the US? Or do you see a recovery in prices?
Yeah, definitely. What you are telling is perfectly right. There has been some apprehensions regarding the demand from China, and that has definitely affected the LME. But at the same time, Indian Copper Study Group has given some forecast according to which about 80,000 tons to 1,20,000 ton deficit will be there in the market, and this deficit of supply demand will increase in the coming year. And this is the region which will drive the LME rate to the higher level. And we are expecting that the LME will be around 6,500 and not less in the coming period.
Apologies for missing your name there.
Because basically that will be, yeah.
Right, Mr. Sharma, what are the current TCRC margins indicating? How have margins moved for India business given supply issues?
Actually, TCRC margin at present is around $90 to $100. But we are precisely not into the business of making revenue or profit through TCRC. TCRC is these people, custom smelters. They are the companies like our peer groups. They get affected through this TCRC margin value. As we are the mine production, we don't depend much on TCRC, but definitely the effect of TCRC remains in our income also. But our core business is mine production. TCRC affects us to the extent of maybe 20 to 25% only because of one of the plant which is located at Gujarat. That is a TCRC based plant. Our main business is insulated from this TCRC.
Right. So how is it that you would judge
Hello.
India's demand-supply situation over the last few months? Since Vedanta's Tuticorin smelter has been out of business, what is the current assessment that you have of the situation on ground?
If you go through the data provided by our Commerce Ministry, that indicates that there has not been any increase in import. Starting from 15-16, 16-17, 17-18, in 15-16 it was about 2 lakh ton, in 16-17 also it was some 2.02 lakh ton, and similarly 17-18 the current year, that is going to remain at the same level. It indicates only thing is that the import data is constant. Only the export figures are affected. Export, which was being done by Vedanta earlier, now that has almost come to nil. That export data means that export figure has come down, and that has made the demand of the local, I mean domestic demand. That export has been shifted to domestic demand. That's all. But as such, there is no shortage, and import has not increased.
Okay. What is your current capacity utilization?
That's what is my observation.
Right. What about your current capacity utilization? Because we understand you have a total capacity of 3.6 million tons. With your big expansion plans, also would like to understand how is it that you plan to fund the capex?
Madam, my present capacity utilization mine-wise is 100%. This year I am going to produce 41 lakh ton of ore from the same mines. So that way my capacity utilization mine-wise will be more than 100%. I am going for a big expansion plan supported by sufficient exploration, which we are going to take up within coming 2-3 years. This exploration will be done side by side. Expansion and exploration, those both will be done in parallel. This exploration will be done to support my reserve base. I am expecting to grow up to 2 million ton in terms of copper production. 2 lakh ton in terms of copper production by 23-24. This will require production of 2 million ton ore by that period. And this expansion program, the phase wise, it is started right now. This will be supported by reopening of closed mines, expansion of the existing mines, and also development in the greenfield area. I will require capex to the extent of 5,500 crores for this, and funding will be mainly through internal accruals. About 50% funding will be through my internal accruals, and supported by some debt from the market, and also equity realization. The debt equity ratio right now I am at 1:1 almost. This I am going to increase to 1:2 debt equity ratio, and internal accruals, as I told. So I will be able to make the arrangement for the fund requirement in coming 5 years.
All right, Mr. Sharma, thanks very much for taking
And my company is rated ICRA rating. Yeah,
okay,
the best rating I have as far as loan is concerned, ICRA rating. So don't see any problem. Yeah.
And we wish you the very best. We also hope that you don't see any problem in the future. Thanks, Mr. Sharma, for joining us and giving us those details.
I just wanted to inform you that my EBITDA margins also has been very good during this period, and I aspire that my profitability will be almost double of last year at the end of the financial year.
Oh, sir. And congratulations once again.